Well, I think this will be the decade of Bitcoin. And I think that as we plug it into billions and billions of mobile devices, like Square Cash and PayPal are doing right now, and as it gets plugged into banking structures, as JP Morgan and Goldman Sachs and other banks embrace it, and as insurance companies build it into their balance sheets, and as companies like MicroStrategy build it in their balance sheet, then of course the demand is going to go up. There's a fixed supply. I expect the price will escalate.
Michael Saylor founded MicroStrategy when he was only 24, building on his vision of helping enterprises deliver intelligence everywhere. Today, MicroStrategy is a NASDAQ-listed company with a market cap of over $5 billion. Recently, Michael has made numerous headlines for his support of and investment in Bitcoin. He joins me today to talk about his thoughts on the current state of Bitcoin and his vision for its future ahead of appearing at Australia's first financial influencers, millennial and Gen Z investment conference, Market Lit, on the morning of Friday, the 2nd of July in Australia. Michael, welcome to TCN TV.
Thanks for having me.
Now let's start with the price of Bitcoin. Michael, where is it heading?
The price has gone up about 120% a year on average for the past decade. It's generally outperformed the S&P index by about a factor of 10. I think it'll continue to outperform the S&P index, and I'll continue to outperform other asset classes because you can mine more gold, you can create more companies, and you can issue more equity in a company. You can issue more corporate debt, you can issue more sovereign debt, you can print more dollars and euros, but what you can't do is ever create more than 21 million Bitcoin. And so it is the hardest, scarcest asset. And as adoption increases and as the technical utility increases, it's inevitable the price goes up.
Now, the world has seen, especially this year, that big names such as Elon Musk have the power to move crypto with their comments. But away from this sort of market chatter, what key drivers and catalysts are you looking to accelerate acceptance, really, and adoption of cryptocurrencies?
Institutional awareness is accelerating this year. I think that Tesla's embrace of Bitcoin did accelerate institutional adoption and awareness. I think the mainstream media is covering the story much more frequently. You see Business Insider and the Wall Street Journal and Fortune and Forbes and the like, and CNN covering it. So I think that mainstream coverage will accelerate adoption. I think that big tech is accelerating adoption. Like PayPal has 330 million customers. Square is driving adoption. I think the IPOs, all the companies in the Bitcoin space are coming public right now. Coinbase, all the miners, Riot and Marathon, and there's a host of others. That's accelerating adoption because all the institutional investors are becoming aware of that. I think Coinbase was adding 2 million accounts a week in the last quarter. So you probably got 3 to 4 million people coming into the crypto world every week right now. That's really driving adoption. Volatility in assets drives adoption, and inflation and loose money policy. They're both of them are driving adoption as people look for stores of value.
So, Michael, given this, are we looking at more or perhaps a less volatile market for Bitcoin?
I think Bitcoin is getting less volatile consistently year after year because as the liquidity grows and as the network decentralizes and as the industry matures, people realize it's a store of value. I think there would have been a big debate. There's still a debate 2 or 3 years ago. Is it a currency? Is it a medium of exchange? Or is it a store of value? And is it an application? I think people understand now, it's not in and of itself an application, nor is it a currency for buying coffee with. It is, in fact, a store of value. And if Bitcoin's a store of value, that means that people will buy $1 billion of it and they will put it in cold storage for a decade. And as you have large institutions buying it as long duration treasury reserve asset, then the volatility falls because, they're not actually buying it to flip it. If if a consumer buys an asset with 10-to-1 or 20-to-1 leverage speculating, then you're going to get volatility. But when an institution buys an asset with no leverage to hold for a decade, you'll get less volatility.
And Michael, what do you think about the rise of Dogecoin and other meme coins? Is this a blessing or maybe a curse for the crypto space?
Sometimes it's a little of both. I think it's all those things. Meme coins are like meme stocks. They generate massive amounts of publicity. Sometimes they cause people to set up their Robinhood accounts or their trading accounts. They draw people into the space.
And do you have any favorites?
I don't trade in meme stocks that I wouldn't trade in meme coins, but I mean, to put this in perspective, it's like you have a certain amount of money that you would invest that you want to hold for 30 years and give to your grandchildren. And that I would put in Bitcoin if I have a treasury. And then you have a certain amount of money that you invest in stocks you believe in, be the Apple or Amazon or something. And we call that just an investment portfolio. If you think they're underpriced, then you're going to hold them because you really love Netflix or Google. And then there's a third category of venture investment. And there are people that invest in small private companies and they think that 95% of them will fail, but they'll get 100-to-1 return on some, and they do it for fun. And if you're a venture capital investor, you could do that. There's a fourth pool of capital we'll call entertainment. I go to Vegas and I have a budget to gamble. I expect to lose. I go to a basketball game and I bet on the Lakers, and like, it's totally irrational, but I'm with my buddy and I'm drinking beer and I bet on it. And maybe I do other types of gaming. So if you're a gambler, if it's for entertainment, if you enjoy it, and if you have a budget for it, then, I mean, who am I to tell people they can't go to Macau or Las Vegas and gamble if they're enjoying themselves? I just think we should classify that as, that speculation as for entertainment purposes. I wouldn't, as a public company officer, be allocating a long-term treasury portfolio to any of those things.
So do you like to gamble with anything, Michael, or is it all based on fundamentals?
I prefer deterministic games, or at least I can calculate the odds. I do like to play poker. I probably enjoy poker and chess a bit more than I would enjoy spinning a roulette wheel or playing another completely random game where I couldn't control the outcome, but that's just my view.
Well, chess certainly is very strategic. So look, finally, Michael, you've invested in a range of assets. What would you say to those deciding between investing in cryptocurrencies and investing in stocks?
Depending upon what kind of investor/trader you are, and how you like to play it, then you could decide what you might want to do. In all cases, you have to study very carefully and consider what your risk is, and they're all harder than buying digital property and waiting for 30 years to let everybody else do the work, right?
Well, Michael, you certainly seem to do the work, and thank you for taking the time to outline your insights today on TCN TV. We're also very excited that you will be joining us at Market Lit, Australia's first financial influencer, millennial and Gen Z conference on the morning of July the 2nd, Australia time. Thank you, and please everyone register to tune into Michael at the end of this week.
Yeah, thanks for having me.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV and drop us a comment. Tell us who you would like to see next and what you would like me to ask them. Or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.